Hello everyone, today is May 14th, 2020, Thursday. The market has closed. Right now it's 6:0, after 6 p.m. So the market has been closed, but the E-mini 500 is still trading right now. Um, Today the market has really a sharp rebound. In the morning, we were at the open. The market was selling quite sharply downwards, and it was quite scary actually. And then the markets started rebound for the rest of the day, really sharp rebound. So a lot of short sellers, if you have sold at this level or even somewhere here, you're basically kind of trapped right now because the market rebounded so quickly, right? And this is just telling me that there's one very noticeable rule of thumb that I have gathered over the years of trading is that you never want to trade when the market opens. What I mean is that today is a absolute a very clear demonstration of that rule at play. You should absolutely respect. Imagine the market opens at 9:30 and you start trading the market. You see the market going down by 1%, 2%, going downwards. You thought this market is breaking down, is gonna break this support. If you're a technical person, you can probably see this point of support is making a new low. You probably thought the market is probably gonna go down even further. We're breaking down. Well, it turns out we didn't, right? If you have sold short or if you have covered your long position, at this point you're basically covering literally at the bottom, and that would be a very terrible trade. I mean, you literally sold at the bottom, or you start shorting at the bottom, and now the market just reversed and squeezed all these people trying to buy the breakout or short the breakout at this level, and all these guys are screwed basically. So what I see here is that I don't have any position on at the moment. Today, I didn't really do anything in the market. I saw the thing came down and bounced. I didn't really watch the market. I was doing something else today. And you're lucky, if you're someone who's lucky, who's able to go long at this point, for whatever reason, that you were able to catch this falling knife, kudos to you. And now the market is at this point. I would actually right now I would just sell my long position. If you're doing short term, I would actually just sell my long position here. I would just close my position at this point after 6 p.m. And I personally think that the market never goes straight up or straight down. You can see that this one is really vertical. We're going very vertical. The slope is quite steep, right? And most logical scenarios gonna happen if you have a bullish bias. It would be that we are going to come down and open lower tomorrow at this level. We're gonna open this level at the tomorrow's opening, and then we might just climbing up again. Or if you're bearish, then it could be something like this, that we consolidate, we came down, and we maybe went up a little bit, then broke down again. So these two scenarios could happen. I'm more on the horizontal consolidation case. In my previous video, I talked about there are just way too many volumes, a lot of volume at this price level. I showed you guys the volume profile. You can see that a lot of volume, a lot of buying power, a lot of purchase has been made at this level, and I think this level is a very strong buying zone or selling zone. It's really a huge battleground between bulls and bear. I believe we're just gonna oscillate here for a while, unless it's like a significant fundamental catalyst comes in. It's going to break the balance of the market. Another thing is that we have a you can see that we have a new rounds of stimulus package coming up. That's in discussion. I believe in the Senate, or I don't know which stage are they in. I'm not paying too much attention to this, but there's a second round of coronavirus stimulus checks that might be coming up. That's going to provide even more stimulus, more buying power for families. I think the stimulus check is going to be 6,000 for per family. If you're a family, and individually, it's going to be 1,200. And this relief package is going to be another $3 trillion in total. So if they're going to inject another $3 trillion into the economy, I mean, it's going to be pretty positive to the stock market, in my opinion, in the short term. So I don't think these Wall Street guys, large funds, all these Wall Street guys, they're aware that the stimulus bill is going to come into the economy. So they're not going to sell off at this moment. They probably want to hold the price up at this level so that, more sheeps, right? Once the average investors, retails, and people that got the stimulus money, they got nowhere to go, right? Like the casinos, everything's still shut down. So they're probably just gonna go to the stock market and spend the money on buying some stock, which is very likely scenario. And as we have seen in the past, in the recent past, this is a stimulus rally. Okay, this is a stimulus bill rally. If you inject $3 trillion into the economy, if you inject like $5 trillion into the economy, 50% of that, in my estimate, is going to go into the stock market. So right now, this buying are not really made by smart money, right? Smart money, like the forward price earning ratio for the S&P 500 is the highest it's ever been since the dot-com bubble. It's the highest. That's the second highest in history. So obviously, the smart money are not buying this for long term. But given that the government wants to print out another $3 trillion in a matter of weeks, so half of that money is going to leak into the stock market, and that's what's going to be the buying comes from. And so, in my opinion, we are not going to break down from this level anytime soon. I think we have to wait until this money comes into the economy, so then the stock market absorbs it, and if you're a bear, you might want to short after that. You see some confirmation sign after that. But we're gonna, we're gonna see once we get there, right? I can't predict the market, a month, 2 months from now. I don't know what kind of market move or market structure is going to make. So that's my opinion. Let's take a look at the crypto market, right? One thing I really focus on is Ethereum, because it just, again, in my previous video, I talked about Ethereum has a smaller market cap, it's only $20 billion, whereas the Bitcoin has a market cap of $180 billion. So Ethereum is about 1/10 of size of Bitcoin. So the potential growth in Ethereum is much higher than Bitcoin, in my opinion, because a smaller market cap. And also, Ethereum is the second biggest cryptocurrency on the market. So it has to solidify its lead. And it's very different from Bitcoin because people can program smart contract on it, right? And my opinion is that in the short term, Ethereum is on track. Since my video is on track to reach this level probably, but I doubt it's going to break the previous high. Previous interim high, right? This high here. I think we're going to reach here, and we're going to be getting some massive selling pressure, and it's going to come down. That's my opinion. But in the meantime, by looking at this market structure, there's no doubt it's going to go up. Like the chance of this going up is tremendous. It's tremendous, according to Donald Trump, that is. And if you look at the potential gain you can make from this trade, would be, let me see. would be something like, even if you bought here, it would be something like the 30% gain, assuming you're not using any leverage, which I don't recommend if you use leverage on cryptocurrency because the volatility is just so high, right? Imagine you use leverage here, you have a like 2-day drop of more than 50%, so you're done. So I think we have about a 30% upside even from this point on cryptocurrency. So this is a very safe trade in my opinion. I would buy quite a bit at this level and hold on until we reach here and see what's gonna happen in the price action. And yeah, that's it. And here's my update for today. And enjoy the rest of your day. Happy trading. Bye bye.